Yeah, hi guys. In this video, I will show you how the market moves with the combination of structure and liquidity. Now, I will explain how we combine the structure and liquidity in order to take some entries which I teach my one-on-one students, and I will show you the sample examples how to combine the structure and liquidity. So here, every high and low in the market have liquidity, right? Every high and low in the market have liquidity at the edges. Liquidity means buy stops and sell stops, right? So I will explain how to combine the liquidity and the structure for the three types of market scenarios. One is upwards market, ranging market, and downside market. uh, See here, it's the market moving in uptrend, right? In uptrend, I have said that every high and low in the market have liquidity. So in the upside, this is liquidity, this is liquidity, this is liquidity. In the upside liquidities are, the buy side liquidities are taken. In the uptrend, the buy side liquidities are taken and the buy side liquidity is expanding. The buy side liquidity expands. See, the liquidity is expanding, the liquidity is expanding, the liquidity, it will expand up to there. If there is any the high time frame order block or liquidity stamp, it will up to extend up to this. So how to combine the structure and liquidity in order to get us some entry? See, these are the downward liquidities, right? These are the downward liquidities, right? These are the downward liquidities, right? So where is our entry in this scenario? If the price moves like this, it didn't give us a high probability setup. In order to give the high probability setup in a uptrend, it should break this liquidity. So this is a high probability setup. Here the liquidity, sell side liquidity is taken. So if the sell side liquidity is taken, we hope for buys and vice versa. Here we are in uptrend and the sell side liquidity is taken. So it's very high probable setup to take us buys. We will have a fixed stop loss and we will target this. Like this we trade. Same setup. And now I will explain it for the ranging markets. Ranging markets I will explain soon. Yeah. For example, we change the color quickly. Yeah, can you see? This is the ranging market, right? This is one liquidity. 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 Now I will show you how to trade the ranges. Listen clearly. See, if the market approached here, sell side liquidity is taken. So if the sell side liquidity is taken in the range, we should always aim for the or target the buy side liquidity. So we target here, we target the buy side liquidity here, we target the buy side liquidity here, and after the buy side liquidity is taken, we should wait for the entry confirmations. I can't teach the entry confirmations here because it's for my mentorship students. I should provide the value. I can't give all the value for free here. We had some entry confirmations and we have a checklist. If the checklist is complied with divergence, etc., we will take a sell and target this liquidity or this liquidity. This is our first target and we target that. Here we entered the trade and we target. Same thing. After this liquidity is taken, we hope for buys. Target this. After this is taken, we hope for sells until any external liquidity, this type of liquidity is taken. We close majority of the positions, or if there is no this type of leg, we directly target this liquidity. Okay, this is how we trade ranges. And quickly I will show how to trade the downtrend. It is very similar to the uptrend. Okay, in the downtrend the market will go like this, right? Like this, like this, like this. So in the downtrend, the sell side liquidity keep on expanding. The sell side liquidity keep on expanding, and the buy side liquidity is protected, right? And the buy side liquidity is protected. In order to get a high probable setup where the structure and liquidity are both are combined, we should get a buy side liquidity sweep, and we will wait for some entry confirmations. I will teach you. if you join my mentorship, and here we enter the trade and we first target this, and there is any liquidity from the left, we target this. This is what keeps separate from the 99.9 unprofitable traders from the market. We didn't see anything from the left apart from the liquidity, and we wait for the order blocks that will appear in the real time, not from the 2 weeks past, etc. This is how these are the three scenarios of the market: upways market, waning market, and downways market, where we perfectly combine the narrative and logic behind the structure and liquidity at the same time. I think this video will be very helpful in order to escape from the market maker traps. So let's go into the real charts, and I will show you how we mark in the real charts. Okay, let me remove the drawings. Yeah, let me mark the structure here. See, higher high, higher low, sorry, lower low, lower high, lower low, lower high, lower low. See here what happens. Can you see here what happened in the market? Here clearly the liquidity is taken. The buy side liquidity is taken, and the structure is downwards because it broke the candle, right? So it's a downward structure. We confirmed it as a downward structure by our rules. So this is a valid sell. Okay, and again we follow the money. This is the new structure point. 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 See, if we follow the money, see, same thing happened. Again, same thing happened in the market. The things repeat itself, bro. The things repeat itself in the market, guys. See, again the buy side liquidity happened, and it filled the imbalance in between the. Always the market seeks the imbalance and liquidity. The market moves from liquidity pool to liquidity pool. The gap, it will fill the imbalances. Okay, see, after taking this buy side liquidity, there is entry confirmation, and we sold from here, and we sold from here, and we targeted this. Yeah, let's continue again. Same thing, same thing, same thing. See, here the market turned into uptrend, right? See how the market turned into uptrend. We are in currently moving to uptrend. It broke, right? Can you see this liquidity is taken? So we sold from here. It will give some reaction up to this liquidity or this liquidity, and we continue the buys again. This is how we trade the market. We don't trade the market like a break of the structures and bullshit. We just trade what we see. We have an objective plan in trading, not any subjective plan what retail and smart money people use. And I use some divergence concepts, but I can't teach here. I can show you the 1 minute entries. I will show in the